You're listening to Pre-Market Prep. I'm Brianna Valesky here with Scott Redler. He's the chief strategist at T3 Live and T3 Trading Group. Scott, how are you doing on this Monday morning?
I'm doing great. Getting ready for another week in Fantasyland.
Exactly. Well, like you mentioned on your note, it looks like we have an agreement coming out of the Eurozone between Eurozone monetary leaders and Greece itself. What are you seeing, though, over there in the Eurozone?
Well, it's one step behind us, another uncertainty kind of out of the way. There's still, they have to push it through Parliament in the next 72 hours, which is good. So that'll create some volatility, not just maybe a straight line up. And if you look at the HEDJ, which is the way a lot of traders put on exposure to Europe, just that is the DAX hedged. You'll see that according to the chart, it just went from 59.20 and it's gapping up into 64, and that's a downtrend that this symbol or ETF has been in for a while. So if you wanted to play a bounce in Europe, which things got extreme last week, this is probably a spot to take some off. So I would say perhaps sell into this up open with the HEDJ, and if you're looking for a cute short, maybe the 64-ish area is a spot, and then looking forward for the rest of the week, if it could digest higher and perhaps hold above just say 62-ish, which was last week's higher support, maybe Europe gets back into an uptrend. But for right now, I would say selling a little bit into this up move after a 7% move in the DAX is probably a bit more prudent than chasing it here this morning.
What about China? I mean, we have Goldman Sachs coming out this morning saying it's a buy story and that it's very confident that the government will be able to stabilize the government. The government will be able to stabilize the economy. What are you seeing in just the FXI and the Chinese stock market overall?
Well, last week you had your overthrow move. Chinese markets get volatile, and this was more volatile than it's ever been, where anyone who started trying to buy a dip in the FXI probably got, pushed out of it unless they had a lot of risk tolerance, because the overthrow move below just say, 43 to 44 early last week was harsh and severe. And then everyone started saying how, the Chinese markets were going to be like NASDAQ 2000, where the FXI can, correct 50 to 70%. So anyway, for Goldman's come out today after a 3-day move, it's not, they're not providing so much value. But anyway, if for some reason, last week's low is the low in the Shanghai, then, at least it won't be a headwind here for us. In the FXI, you can see some resistance right around the 200-day, which is around 43.80. And then, there's real resistance a little bit higher around 45.50. So for the active trader that bought in the hole last week, the quick trade, I would say, probably happened. Now the next move up into the 45-ish area, if it would claim the 200-day, it's probably going to be harder, considering 50% of the companies there are still halted, so they're going to have to start unhalting these. And I'm sure investors that haven't been able to trade their holdings for over a week might be a little itchy just to sell. So it'll be interesting to see if they could absorb that supply. So at this point, you had your overthrow move lower, you had your snapback, and now we'll see if you can hold in there and just not be a headwind.
Let's take a look a little closer to home at U.S. markets, especially bonds right now. A lot of people earlier were arguing that we wouldn't see a rate hike in 2015, but you mentioned this note this morning that that might not be the case. We might see at least a little bit of one. Even Barron's coming out over the weekend with a story saying bond funds have long been valued for their income and stability, but with interest rates set to rise, investors could soon face loss. It is a time to get out of bonds. I mean, what are you looking at in TLT?
Well, the TLTs have told the story a lot better than most analysts timing-wise. If you look at the chart, back in January, the TLTs broke their accelerated trend line. So and one of my the processes that I use is when an ETF or a group break below the 8 and 21 day, it loses momentum. So the first sign that rates could go higher finally was in January-ish when that broke. And then if you look a little closer to May, the TLTs broke below that intermediate trend line, which was around 129. And now fast forward, the TLTs have been below the 200-day for almost 2.5 months, showing you a real commitment to the weakness in this, which means that people are starting to really get confident that rates can go higher. And I know last week with the volatility in Greece and China, everyone said, oh, the Fed has to put it off. But my gut tells me they're still going to do at least once. I'm not sure if it'll be September or December, and the TLTs are telling me that's the same. So right now, if you look there, there's a small pivot from last week around 114.88 in the TLT. If that were to break and close below, chances are, you're going to see more downside there, and that could mean rates poking up a little bit. And at this point, there's been some signs out there to do some kind of adjustments to your bond portfolio. I'm not a bond specialist, so when people ask me, what could I do to help hedge my bonds, I would say short the TLTs or buy the TBTs or talk to the guy that manages your bonds, because I'm an equities guy.
Definitely. What are you looking at the overall and the spiders, SPX, SPY going forward in this week? We've got a couple of earnings reports. We are officially in earnings season right now, but let's get your take on the overall market, and then we'll look at some specific stocks.
Well, I will have to say last week, I don't care who you say you are, how good you are, it was hard. For me, it was one of my toughest weeks of the year with the misdirectional moves that we saw in the S&P. From last week, we started on Tuesday. You had that outside reversal, which gave some of us a clue to be long, like me. And then on Wednesday, the next day, it got engulfed, and we closed below the 200-day for the first time in 2015. So most prudent traders like myself probably brought risks down. So I brought all my risks down on Wednesday to then get a gap up on Thursday. And then, for that to fail, and then Friday to have a gap up, and then finally the gap to go, it was not an easy week. So if you lost money, hopefully you had a system where you lost less than you had to. So anyway, fast forwarding this week, we're opening up, 12, 13 handles. I think the first spot is like 2,083 in the S&P or the SPX, because I trade the cash. If we were to hold above 2,083 today, I think that we try and build, but the next real resistance is that 295 to 2,099. That's exactly where all the moving averages are curling down. So if the sellers want to try and hope for lower prices, they don't want the bulls to reclaim that just a 2,100 with authority. I don't think that happened today, but I think this week, and those are the levels. So I'd write down, if we fade today, I think key support to show any commitment to last Friday's bounce would be probably 2,067 to 2,074. So if you want to write down levels, if you're a bull and you're trying to be long, make sure 2,067 to 2,074 holds. If you're looking for some kind of momentum, you would think 2,083-ish holds today. And if you're looking to see where you could hold your stocks and look for resistance, 2,095 to 2,099 is a pretty good spot.
Some great levels from Scott Redler. Make sure to take a note of those guys. Like I mentioned, we do have earnings, and the banks have been an interesting sector to watch, especially amid all of this Greek news. I mean, we're going to see JP Morgan, Wells Fargo, Bank of America. Are any of those on your radar? And if so, what are you kind of looking for from them?
Well, you want to see how they react. You want to see a lot of people start to just think that the banks are buy because rates are going up, they got to make more money, which is the thesis usually. So it'll be interesting to see with the first poke up in rates for the quarter, how did they do? And what's the quality of their earnings? And as of now, during this pullback, they held higher. The S&P went to the 200-day, and JP Morgan held well above the 100-day. So it showed you some relative strength. So the question is, how do they get treated if they're just in line? How do they get treated if they beat or if they miss? So I'm probably not going to be long any of these banks going into the earnings, but I'm going to watch to see how they react, to see if I can enter after and how that affects the broader market, for my swing trading type of process moving forward. But I do think a lot of eyes will be on those banks because they've been, I can't say a safe haven, but they've been acting better than most other sectors in the market the past quarter.
Yeah, absolutely. Let's talk high beta tech. Of course, everyone's always watching Apple. It's been a little bit of an interesting trading action, especially late last week. They did get an analyst upgrade this morning. What are you looking for in Apple?
Well, Apple's been a little bit of a headwind for the market, over the course of the past, I would say almost 2 months, where, in late May when it peaked out, first last quarter, it couldn't break out, which is fine. But then throughout the course of May and June, it started to just, be lethargic and trend lower. And it was below the moving average. And finally, late last week, on Thursday, that's what kind of led the market lower. I don't know if it was meant to be that way to get the last people out of it before potentially this quarter's earnings. But on Thursday, it was sold down pretty hard. It did hold the 200-day. And then on Friday, you had a gap up that if anyone tried to fade that like they did the day before, they probably got trapped. So from here, you have this big range now between 118 all the way up to the high 130s. I would say, it has some room to get back to 126 to 127.50 before it starts seeing, bigger resistance. And then I think, for it to have a sustainable move, we're going to have to see what's in front of us this quarter. And earnings, I think, on Apple aren't until next week. So right now, see if today's gap open holds. If you went long on Friday, it's up this morning. At least, you're getting a little bit of follow through as a trader. There hasn't been much of that, so be thankful for that. I would trim some and then maybe hold some, and then we'll see how much of today's gap holds, if any of it at all.
What about Google? We are going to look out for their earnings on Thursday. It seems like they just can't seem to beat, but fundamentally, Google's got their hands in just about everything. So, what are you looking at from the Goog or the Google?
Google, I think I typically trade the Google, Google, Googl, and during the volatility, you could say it did hold that 540 support, and then late last week it reclaimed all its moving averages. The stock hasn't really done anything in a long time, and you do have this big range since actually almost 2014, where you have 500 as the lower end, and then you have 610-ish the higher end. In the middle, you have 580. So people aren't expecting that much, but I think they'd love to see it go higher. So would I. I'd love to have Google back in the game trading-wise. I'm not going to really take a look at it until Thursday because I want to see where it is, where it's trading, and whether or not I'm going to take some kind of option strategy. But for now, it's been in a range for almost a year and a half, if not almost 2 years. So I think if finally, some of the fears are quelled, whatever that word is, about search going to Facebook and all these type of things, and plus their handset built this business has been so profitable because, as you saw, there was some stuff out about Apple. Apple and Samsung are the only ones that have been making money in the smartphone market. We'll see what happens. It would be nice to have it back in the game. You have 580 resistance, and then you have 615. That's nice.
Let's talk about Tesla. We're not going to see their earnings, I think, until about July 30th, but we got some of our traders in the chat room interested to get your take on Tesla right now.
Tesla was one of the strongest stocks for the last 2 months, and then finally, you had the Citron report, and then you had 2 downgrades last week, and it didn't really react that well on Friday. It could have been options related, or I'm not exactly sure, but at this point, I do think that it's still okay. It doesn't have the same momentum it did when it was riding the 8 and 21 day up until that break on July 7th. So at this point, see if it could rebuild and hold 254. If it could hold 254 and go sideways a little bit, maybe it gets a little bit back on track. But for right now, you have to be a bit more careful with it because it did lose some momentum late last week, and it's going to need some time to prove itself that it could, still hold up with that high valuation that the street's letting it have.
What about Fitbit? I think we're looking at the end of its analyst quiet period, so we'll see some action coming out of there for the next couple of days. But what's your take on the stock right now? I mean, fundamentally, technically, I know we've talked about it with you before on the show. We've had someone else who mentioned that they had a Fitbit and like the band broke a couple times. So just which is not that reassuring. But what are you looking at in the issue?
I do think that anything that competes with Apple is going to have some trouble, and Apple will do it better at some point, but Fitbit did get out there early. It's traded well as a new issue. All you could ask for is it to trade well in the first, multiple months or multiple weeks. And I think last time we talked about it, I said if it can clear 34.40, perhaps it takes out the IPO high or the post-IPO high, which was 40. It did, and they hit as high as 44. Late last week, it stalled a little bit. But now if the market gets its footing, perhaps, it can go again. I would say if you're in it as a trader, you could use that 40 area, like 40-50 as a stop. And if some volume does come in, like very powerful volume above 44.38 and it can continue, this does have a little bit of the makings of a Shaq and a G Pro where maybe the first 2 quarters of its public life, could be really good as a lot of people are short and it's, following a strong trend. But then afterwards, the fundamentals better add up because you did see G Pro get crushed once it lost the 8 and 21 day, and the same
Right.
thing for Shaq once it hit its peak above 90.
Yeah, exactly, exactly. So I guess we'll just have to see where Fitbit goes from here. The one sector I wanted to touch on that you also brought up was airlines. You mentioned UAL specifically, but if you wanted to start with UAL and then cover a couple others, I'd love to get your take on the airlines right now.
I know a lot of analysts have been talking about how the sell-off was overdone and that, fundamentally they trade very cheap. And, you had that last little move lower on 7-1 when they had the antitrust price fixing, you know, articles or whatever. And it didn't make new lows. And I think UAL, if you're going to stick with one of them, happens to be one of the better ones. Trading wise, technically, if it gets above, this 56 area, there's still resistance overhead, but it does have some room. Um, I don't love airlines. I trade them. They've been acting better. They've acted better in 2014. This year they've been in a downtrend. But there are some trades there, and there'll be some big resistance around 57.5 in UAL. And if you look at JetBlue real quick, JetBlue held in
It's the
best.
other one I was going to
JetBlue is
ask you,
above
yeah.
every moving average. If you're an investor in JetBlue, you had a lot less headache than if you're in UAL or Delta.
Mm-hmm.
And technically, that one was best.
We've been on the line with Scott Redler. He's the chief strategist at T3 Live and T3 Trading Group, and he is awesome enough to join us every Monday morning. It's a great way to start the week. Get some good fundamental and technical takes from Scott Redler. Thank you so much for joining us this morning, Scott. We can't wait to have you back next week.
Sounds great. Great job, and thanks for having me.
Thanks.